So we've got a number of earnings thus far, and I must say I'm quite impressed. We're obviously focusing on the mega caps most specifically here. We want to get Apple. We got Microsoft. We were surprised. We were expecting not such a good quarter. I guess those numbers were a little bit more consistent than we thought they were going to be. Alphabet, obviously not as consistent. Oh well. Facebook, pretty good. The big kahuna for us, though, is still Apple. Why is Apple so important? Well, I don't think they're struggling with demand. I think everyone wants iPhones. What I'm concerned about, and why I'm labeling the big kahuna, not because they're Apple and obviously a big company, but because they produce such a large amount of their products in China, which is locked down. If Apple says, hey, we've got problems generating supply, we're going to be impacted by these China lockdowns, not because they have customers in China, but because they have factories in China, that is going to raise some concerns for me. Not about Apple in particular, okay? I'm not an Apple shareholder. I'm not opposed to being one, but it's quite an expensive stock. But I think that will impact other companies that have China exposure. And if we get Apple with negative China commentary, I just have not heard enough about the China factories being closed. Maybe I'm wrong. Maybe I'm looking into that too much. We'll find out tomorrow if that's an issue or not. That's what I'm looking at. Other than that, though, I am pleasantly surprised, and I've heard a number of things that are giving me calm. And, you know, I took the SPY put options off on Monday for a large gain, happened to be, and I'm feeling good about that. I've got still a little under 10% cash, and I might begin to deploy a lot of that if we get some favorable China-related manufacturing news out of Apple. What other earnings am I looking at that are giving me some economic stability? Well, Ford, apparently just now, but GM, I was listening to the earnings call yesterday. They didn't talk about anything slowdown related. In the previous massive 07-08 crash recession, which people are trying to, project out here, trying to prepare for here, trying to get out ahead of here, they were in the midst of that. They went bankrupt in that, and they then had to become a public company because they got a government bailout. They were asked, do you feel any impact about rates? They basically just brushed that off. They are maintaining their forecast, as is Ford. I just bought a Jaguar F-Type yesterday. It wasn't difficult. I really should have qualified for that loan. I don't have that much money. And I have another car loan. I haven't sold the other car yet, but I was able to buy that car. So I think other people that are employed and not self-employed will be able to get the cars they want to get. And it's a very emotional decision. People make that decision even when it doesn't make sense logically. Okay? So I am more optimistic today than I was Thursday of last week. Part of that is the fact that the market has had quite a significant pull down, draw back, pull back, draw down. And the NASDAQ was down roughly 4% a day. That is quite a lot. And maybe we can stabilize here for a little bit. Maybe we get some Fed saying, hey, we don't want to crash markets. We're obviously markets aren't our goal, but we don't want market instability. And they kind of flirted with that at the end of last week. We heard Bullard on Friday be significantly less hawkish than he was on Thursday. We saw Loretta Mester be relatively, or hawkish, not bullish, or dovish rather. Both of them more dovish than what we had been getting. It seemed like we were getting a more and more hawkish. We got a little bit of dovish at the end of Friday. Now we're in the blackout period. They're going to do their official thing next week, it seems. And next week, maybe they're going to not appease the hardcore hawks. And that is exactly what gave us a rally last time they talked. We had a very strong rally. It got too strong, okay? Watch the videos towards the top. It got too strong in our opinion. And obviously, we have had another pullback. So, obviously got too strong. But maybe we can stabilize here. We'll see what happens with Apple tomorrow. Maybe the market is just stabilizing. And then we get a little bit of Fed dovishness, and we can have a little bit of a recovery. And I think that's okay. I think we can prepare for that. So I'm continuing to nibble, continuing to add. on stuff I just think is simply well priced. There's plenty of stuff I like that are at well below pre-pandemic levels. Okay, that's the kind of stuff that you just gotta bite the bullet. Fine, maybe it's down next month, maybe it's down 3 months from now, maybe it's even down 6 months from now. But it's probably not going to be down 80% again. It might be down 10, 20, 30%. You just got to prepare for that, and I am, because I'm expecting tremendous upside in some of these names that are just totally beaten down. I'm not talking about Peloton. I'm not talking about Zoom. I'm not talking about anything that's been in the mainstream media. I'm talking about Editas, Jumia, logically sound cases that we've made on this channel and have videos specifically about Jumia, Virgin Galactic, and CRISPR Therapeutics. CRISPR Therapeutics and Editas are very similar. I think Editas is slightly better, and it's quarter the valuation. So I have more weighting in Editas. But I am nibbling, continuing to. I am reasonably well surprised on the earnings. And I have a guess. I am fearful about China supply commentary out of Apple's earnings tomorrow. That is my fear. That is what I'm looking out for. I don't care if their demand is good. I don't care if their demand is bad. I don't. I care about their ability to produce and what that means for other companies that produce in China. So we'll hear what they say. We'll see what happens. That's tomorrow. We'll make the video after. And until next time, peace out.